Planet 13 could possibly be the next biggest growth company coming into one of the potential biggest markets. Is this all just hype, or is there real value behind the company? In this video, we're going to look at what Planet 13 actually is, some good things about the company, and digging into their financials and future growth potential. Before we begin, don't forget to like and subscribe to support the channel. Planet 13 is a cannabis company and owns the world's largest cannabis store in Las Vegas, Nevada, and has plans to expand to California. However, what separates them from other dispensaries is that they are vertically integrated, so this means that they grow and own everything that is involved in selling cannabis. So the store pretty much is just a big showcase for their own products, similar to an Apple store, which only sells Apple products. Their only retail location as of now is in Las Vegas, and it has an entertainment style vibe to it. This makes it a big tourist attraction for cannabis lovers. If you look at the store, it is basically a mall, but just for cannabis products. Planet 13 calls it a cannabis entertainment complex. They even have coffee shops, restaurants, and other entertainment sections that all revolve around cannabis. This one location is immensely popular, and people are coming from all over the world to go see this location. This is great for the brand, that it has such a wide reach and is doing well with this one location. They also have great reviews, and people are really enjoying the complex. This is also a great sign for a growing company. If you can get the concept to work at one location, then opening other location is a no-brainer. Another great thing the company is doing is making cannabis easily accessible for people that might be hesitant to give it a try. It normalizes the use of cannabis if there's a place to go where you know you're getting it from a reliable source, and there are other things to do besides smoke. This creates great brand association, and people are more likely to buy one of their products in the future. However, other cannabis stocks have looked like great potential growth stocks, and they all have tanked. If you look at Aurora Cannabis and Canopy Growth, they both rocketed up and were expected to be the next big thing, but they all came back to reality. Is Planet 13 the same as these companies? To answer this question, let's start by looking at the basic financials of Planet 13. As of their most recent quarter, Q2 2020 numbers, they have around $23 million in cash, $36 million in plant, property, and equipment, and they have $30 million in total debt, so their risk of bankruptcy is low. If they needed to, they could just sell everything off and easily pay back all their debts. It's always good for any company to have a strong balance sheet and have the ability to pay off their debts if needed. However, the company at the moment is struggling to turn a profit, and they might not have a clear path to profitability. Last quarter, they lost around $4 million despite bringing in $10 million in revenue. This was partly due to the coronavirus shutting everything down, but even before then, they were running at a loss. If we dive deeper into their financials, we can see where their biggest loss is coming from. Their biggest loss is coming from general and administrative costs. This basically just means their employees. Their salary, wages, and expenses went up 16% from 2019, and this doesn't even include the expenses of payroll taxes and subcontractors. This makes sense though because they're expanding and they need more employees to fill out more positions. Also, it seems like Planet 13's best asset are the people that work there. If you look at the reviews, they all mention specific employees that were so nice and knowledgeable. However, this could be a problem, as this concept is hard to expand and replicate in multiple locations. If you have a product such as an iPhone, the more phones you make, the cheaper each phone becomes. This is called the economy of scale. However, employees don't work like this, and this is where the biggest issue Planet 13 is facing. After opening new locations, will the experience be the same, and can they continue to get employees that are just as great? Many companies face this problem. The original location is always the best, but as they expand, the owners can't be there all the time watching things, and the quality starts to slip. This could be a major issue because Planet 13 is all about the experience of going to the store. It is basically a tourist attraction. For example, if you go to an Apple store and have a bad experience, you are most likely still going to buy an iPhone because you like the product, not just the stores. If you go into Planet 13 and have a bad experience, you aren't going to go back because the store is the product. Planet 13 might have difficulty becoming a known brand with a solid product rather than just a destination as they try to expand to new locations. People don't go to Starbucks because the staff is the most qualified coffee makers. You go there because you like their product, and half the time they actually get your name wrong and people still go back for the product. Planet 13 might have trouble with this if their product isn't all that good and is more expensive because of the experience compared to other dispensaries. People might go once for the novelty of it, but won't come back as the product isn't worth it as a consistent purchase. They also taken a big hit because of COVID, since their stores couldn't actually open. They actually started to show over a $2 million loss since the beginning of the lockdowns. They have adapted, though, to curbside pickup and delivering cannabis to people's houses, so this shows that they can adapt if necessary, and their balance sheet was fairly strong going into the pandemic, so I think they will be able to make it through. However, this will slow expansion down, as less money is coming in, and they can't justify building more locations, especially if they can't even let people into the new stores. The other biggest issue facing Planet 13 is government and taxes. Cannabis right now is taxed so heavily. In Nevada, there's a 10% tax imposed on the sale of cannabis, and there's an additional 15% tax on the sale by cultivators to a distributor on all cannabis products. Planet 13 has income from operations at a loss of almost $3 million, yet still has to put aside almost $1 million for taxes from the product that they sold. So they might be showing revenues of over $10 million, but a lot of that is extra taxes they add on to people's orders. So a lot of that revenue is actually going to taxes. Since they can't push all the extra costs onto the consumer because the prices would be insane for their product and people would just go somewhere else to buy their cannabis, Planet 13 is actually eating a lot of the extra taxes themselves. This is making it very difficult for the company to turn a profit, because whenever they sell something, they have to put in a big chunk of the profit being made aside for taxes. This also means they can't spend that money on expansion and other investments for the company. Another big issue is that cannabis isn't federally legal yet, so their expansion is limited to just the states that it's legal in. This is a big factor, I believe. Eventually it will be legalized federally, but for now it is a big hurdle that a lot of cannabis companies have to deal with. Planet 13 is a great idea that is being executed well, but future growth isn't certain for them. If they can open more locations successfully, come out with products that people specifically want to buy, and if the laws change to favor cannabis more, then the company will be in a great place to expand into a household name. But until then, I'm staying out of the stock, and I'm going to be watching on the sidelines until some of these concerns are addressed. And with that being said, as always, thanks for watching, and don't forget to like and subscribe to see more videos.